What's up everybody, Nate here, and Silicon Valley Bank and Signature Bank have essentially been saved due to some Federal Reserve emergency measures. The depositors and people who had money in Silicon Valley Bank are going to get all of their money back despite both banks essentially collapsing. And I have seen a lot of talk online about how this is incredibly unfair and an unfair move from our federal government. Many online are saying that this move by the federal government heavily favors the elite and wealthy class of the United States while completely leaving out the middle class and the lower class of this country. They believe that the United States government shouldn't be stepping in to save these banks while we have issues with inflation and housing affordability and a wage crisis throughout the United States. So with the dust sort of settling around the entire Silicon Valley Bank situation, I want to kind of give a broader perspective on why the government would want to step in to save the banks. But I first want to talk about why people believe that this entire situation by the federal government was completely unfair. Now, what a lot of people believe is going on is this was a bailout from the federal government. Now, a bailout refers to the United States government using taxpayer money and using funds that they have to give to banks or to give to a corporation in order for them to continue their regular function. So if a company was to go under and millions of people were suddenly going to become unemployed, or in this case, an entire sector was going to lose a lot of liquidity and people weren't going to be able to recover their funds, then the government could, in theory, go in and provide a bailout, which means they are going to provide some sort of funding so that way the entire institution can survive. But that is not what happened here. So what you had here was essentially a federal government backstop. So the difference is the government isn't actually providing a whole bunch of funds. It figures out a new set of programs in order to get that money. So in this case, according to President Biden and Treasury Secretary Janet Yellen, the government will not be using taxpayer money in order to fund a lot of these programs that are saving the banks. So how this is going to work is through a multi-step process of insured funds and uninsured funds. Now, all insured funds up to $250,000 are protected by FDIC, which is the Federal Deposit Insurance Corporation. So anybody that had any amount of money of around $250,000 in Silicon Valley Bank and Signature Bank is going to get all of their money back, and they would get this if they had their money in any bank that collapsed, whether it was a credit union, whether it was something like JP Morgan Chase, it doesn't matter. FDIC is going to kick in at that $250,000 mark if a bank goes under. But this bank also has some other types of funds. It has a lot of uninsured funds, and that is anything above $250,000. Now, what the government did in this case, it is going to run a special assessment fee on a lot of other assets and collateralized loans throughout the entire banking world and on Wall Street. So it is going to assess all different banks and their holdings, and it's going to assess them a fee. That fee is going to be used to pay back all of the money and all of the uninsured funds from Silicon Valley Bank. So that is basically step one, and step two is for the Federal Reserve to provide a line of credit to Silicon Valley Bank and to Signature Bank. So they are going to get financing, and Silicon Valley Bank is going to have to give up some high quality collateralized debt like mortgage-backed securities and treasury bonds in order to start paying back this loan. So like I said, as of now, taxpayer money is not on the table to be used. Could it be in the future? I have no idea, and it really just depends on how sort of bad this entire banking situation gets and if we have any contagion and massive fallout. So if other banks are massively connected to Silicon Valley Bank or Signature Bank and they start to really go under, then we might start to see some actual bailouts to save the entire industry. But what people are the most upset with in this entire situation is it appears that the federal government is giving special treatment to the elite and wealthy class because they are the ones that have money. Meanwhile, student debt has yet to be canceled. Meanwhile, inflation is still at record highs. Meanwhile, we have a cost of living crisis all throughout the United States, and the government and Congress and our Federal Reserve is not taking action to solve all of that, in their opinion, but they suddenly were able to take care of this entire banking issue in a weekend. And to sort of explain this entire issue, you kind of have to understand all of the different sides of it, right? It's not just a black and white issue of the government coming in and saving a bank. No, this was a very special situation, and there are three three major perspectives. You have the depositors, so people who actually had money in the bank. Then you have taxpayers who could potentially fund some type of bailout. And then you have the actual federal government and what they want to do for the economy and the banking sector and for consumers. So let's go over the depositor situation and what they wanted out of this entire situation. So the main depositors who had money in Silicon Valley Bank were wealthy individuals and mainly startup institutions. We had millionaire startups and billion-dollar firms essentially holding their money in the bank. And SVB was known to work with a lot of startups, and it was known to work with a lot of VC firms who also pumped money into those startups. So this was kind of an entire ecosystem that ended and sort of began with SVB because they started to put money into VC firms who then put money into startups who then took that startup funding money and put it right back into SVB in order to hold on to it and use it for things like payroll and investments. This bank was holding on to a lot of startup capital and a lot of VC money, something that has exploded over the last few years. So SVB had a ton of money that they were able to go out and use and invest with because these startups were doing so well. And pretty much any startup idea in 2021 was getting funded no matter what because VCs could get a return out of everything because everybody was investing money. That is pretty much how things have been over the last 10 or 15 years. After the 2008 great financial crisis, the Federal Reserve lowered their interest rates to near 0% and then kept them there for a very, very long time. So you all of a sudden started to see this big expansion of startups because there was so much money and so much investment that was pouring into our economy. They wanted to kind of create that trust again with the housing market so people could go out and get a mortgage really easily. They wanted to incentivize consumers to spend a lot of money, and that also incentivized Wall Street to spend a lot of money too. This was the biggest bull run in stock market history from just after the financial crisis till around 2020. It's no coincidence that you also saw some huge tech companies like all of a sudden Facebook and Uber, Airbnb, and all of these other tech startups that we use pretty much regularly today and are now multi-billion-dollar companies got their start during this time because there was so much extra money, and because that time lasted for so long of low interest rates and a lot of spending, that meant these companies were able to stabilize themselves into our economy for the future. But in 2023, the entire economic system has changed. Now these startups aren't bringing in as much funding, they're not bringing in as much money from consumers, and they're burning through all of their cash, which is part of the reason why SVB failed. But what you got to understand about startups in the United States is this was the economic climate. A lot of startups were getting money, whether they were good companies or not. They were getting funding, and what an economic crash does is eliminate a lot of those startups. So when banks fail, now the startups that don't really have any liquidity, that don't really have a good business model, well, they disappear because there really is no room for them. Their business doesn't make any sense. Only the startups that have a good business model and that actually solve consumer or business problems are the ones that are going to survive. That is what we're seeing in 2023, but the economic climate of before, say pre-2020, meant that pretty much any startup could survive under any conditions. A startup's goal is to make as much money as possible so that way they can grow as quickly as possible. They pump as much money as they can into marketing and their innovation so that way they can bring their product to everybody around the world. That creates a lot of jobs. That creates a whole lot of economic expansion all at once because now people have a lot more money to spend. An economic boom like this, though, does not last forever, and eventually you're going to see a bust in your economy. And this is what a lot of economists have referred to over the last couple of years as the everything bubble. So pretty much everything went up, all at unprecedented levels, and now it's all starting to crash back down to reality. Now, startups wanted to get their money out of Silicon Valley Bank. They wanted to be insured, even though they had a lot of uninsured funds in the bank, because this would have meant a basic slowdown of our entire economy in general. Because now if these startups lose their money, well, now you have thousands of businesses closing all at once. That means people are going to lose their jobs. That means there's going to be a lot less spending in our economy. It means people aren't going to be able to afford things like their mortgage. So you could see a collapse in the stock market. You could see a collapse in the housing market. This was a really big issue. And regular Americans don't want to see that too, because that trickles down to everybody. Because even if you say this affects only the elite, even if you say this only affects the banking sector and the rich people in the United States, well, eventually it's going to trickle down and it's going to affect you. That is how the system works. So the depositors, the startups, and the VC companies that had had money in Silicon Valley Bank, they wanted to get their money out, or else the entire startup space was going to fail basically overnight. But now let's move on to the taxpayers. So taxpayers in the United States don't want to have to fund the rich, wealthy elites' problems. The big criticism right now is it is not on the average American consumer to watch out for what these big banks do. They're the ones that over leverage. They're the ones that sort of created this startup monster, and they should have known better and been a little bit slower so that way things didn't blow up. That way the everything bubble was not even created in the first place. That is entirely on them, and now the American taxpayer is going to have to pay for their mistakes. Now, I completely understand that perspective, especially from somebody who would ultimately have to pay for that mistake. Taxpayers don't want to pay for a bailout, and in my opinion, they shouldn't have to always pay for things like a bailout or even a backstop from the federal government. But in one way or another, this entire situation could affect everyone if it becomes a contagion, because if the entire banking sector starts to fail, well, that's going to affect your local bank. It's going to affect every other banking institution in the United States, and everybody could lose money. We are all a part of this economy, and that means that we have a fiduciary duty to ourselves to try to protect ourselves in the best way possible from any type of catastrophe, whether that's inflation or a housing market crash or a banking failure. We have to do whatever we can do because we don't have control over the government. We don't have control over our economy. That means as a taxpayer, we also have to be financially educated and understand how money works and what we can do to sort of protect ourselves. And as a taxpayer, there are ways that we can sort of micro prevent this in the future by sort of looking at what bank you actually do business with, their reputation, and what assets they are buying. You don't want to be connected to a bank that does a lot of shady dealings and over leverages itself. That puts your money at risk. So you have to do your own due diligence when it comes to investments, when it comes to saving, and where you do your banking. I don't decide what happens with my taxes, so the federal government is going to do whatever they feel is best with it. So I can only protect what I do with my money today, what I do with my money that I have in my hand. And that leads me to the final part of this entire equation, the actual federal government. Now, the federal government decided to step in and provide a backstop to Signature Bank and Silicon Valley Bank in order to stop them from failing. This is because they did not want the entire banking industry as a whole to collapse. It's worth mentioning here that the government did decide to do something about Silicon Valley Bank, but it's not always that way. The government has let corporations and banks fail in the past. One in particular is Lehman Brothers during the 2008 financial collapse. They were looking at options of potentially bailing them out and potentially saving them, and other banks actually buying a lot of their assets, but nobody wanted to do any of it, and the federal government ultimately decided to let them fail. This was a catastrophic event, and it basically kicked off the entire financial crisis and sent our economy into a recession. And they knew that. If you have not read it yet, I recommend the book The Weekend That Changed Wall Street by Maria Bartiromo. This basically goes over the entire financial collapse and that specific weekend where there was multiple banks at stake of collapsing in 2008. She talks about how the Federal Reserve at the time and all of the big banks in the United States at the time knew that this was going to be a catastrophic event, but nobody wanted to get their hands dirty and nobody wanted to have the fault be on them. So they essentially let Lehman Brothers collapse, and what that meant is that all of the creditors and everybody that had Lehman Brothers debts, well, they weren't going to get paid anymore, and that sent a shockwave throughout the business and financial world, and like I said, caused an entire collapse. Now, Lehman Brothers was a way bigger bank, and they had their hands in a lot of debts throughout the United States, so if they were going to fail, a lot of other banks were also going to fail too, and many other banks were also investing in the same exact thing, so this was a more systemic problem. I don't think that that is sort of the big issue today. The big issue of today is Silicon Valley Bank was only pretty much investing in startups, and it had some other bonds that it was leveraging, but for the vast majority of what it was using to spend money, that was through startups, particularly in the tech space, and when they started to fail, that meant the entire system was going to fail too. The federal government in this case doesn't want the banking sector to fail, because if that bank goes down, well, now anybody that had connections to that bank, now any of the startups and VC companies that had money there, well, they were going to lose all of it, and that meant that any other bank that was connected to them was also going to lose a ton of cash. It can also also send a lot of fear and panic throughout the entire world. If major banks are going under, then that means the American consumer might not be protected. They're going to go to the bank and they're going to start pulling their money out of other banks, even if that bank isn't affected at all. So it was more about trying to keep the entire economy stabilized by offering this federal backstop. Now look, I'm not saying that this was fair or unfair by the federal government, but the federal government has a lot of different voices in its ear when it comes to things that it needs to do. Its job is to keep our economy stable while also trying to stay out of the economy as much as possible. It wants our markets and it wants our consumers to be able to spend and freely do what they want without that much government intervention. Everything has consequences, so whether the federal government decides to do one thing or another, that is going to have consequences. And it might work out for you, but it probably isn't going to work out for everybody. So what you need to keep in perspective is no matter what a government tries to do, it is almost always going to be in the wrong, no matter what. To give you an example of this, if the Federal Reserve right now decided that it was going to lower its benchmark interest rates, well, that would create a lot better economic conditions for startups and for Wall Street and for consumers, because now they have a little bit more relief to go out and spend their money. They can apply for a mortgage and get one way easier than if interest rates are around 6, 7, or 8%. That is just a fact. But would that really solve our housing crisis? Well, not really, because now housing values are going to skyrocket once again because everybody is flooding into the housing market because it's really easy to get a home. Prices are going to go way, way, way up, and that means wages need to go up, and that means everything else needs to go up, and what you have is an inflation problem once again. Now everything costs too much money, and eventually, like I said before, no economic boom can last forever, and the bigger you make that economic boom, the harder it's going to fall, and we are in a falling period right now. There are going to be winners in this economy, and there are going to be losers in this economy, and you can't wait for the government to come out with some sort of plan in order to save you or to try to work on your side. It's just never going to happen. You have to take responsibility and do as much as you can to try to become financially successful in this economy. Growing wealth is difficult. Trying to have multiple streams of income is difficult. Trying to financially educate yourself when you know nothing about finance is really, really hard. But doing nothing and suffering is just as difficult, but you get to decide which hard you want. Lastly, I'll leave you with this. There is a lot of craziness in our economy right now. You can talk about regulations that the government could throw in. You could talk about fairness that needs to happen through the entire industry. All I will say is, if there are changes you want to see in the world, be that change in the world. Don't rely on someone else to make the change. You go out and advocate for these changes. You do as much as you can to try to change the system if that's what you want to do. Build your wealth as much as you can so that way you can have influence on the world and you can make these changes that you see fit, so that way we can have a better world. Because if the world is not changing right now, then it is your responsibility to change it. That way something like this SVB situation and the everything bubble never happens again. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.